We're all told to aim for a good credit score, but what does that really get you in today's market? Today, we're going to dig in and find out if that score you've worked so hard for is actually getting you the best deal, or if it's secretly costing you a small fortune. So let's just jump right in. Picture this. You check your score and boom, it's a 690. Solid, right? You're not in the danger zone, you feel pretty good about it. But here's the real question for 2025. Is that score truly good enough? And here's the brutally simple answer. Yes, a 690 is good enough to get you access. You'll likely get approved for the loans you want. But, and this is a really big but, it is absolutely not good enough to get you the best price. And that little gap, well, that's where tens of thousands of dollars can disappear.
And this brings us to what I call the 690 score paradox. It's this weird middle ground where you're seen as a totally responsible borrower, but you're still locked out of those top-tier savings. So what gives? What's really going on here?
Okay, so let's break this down. That 690 score puts you smack in the middle of the prime category. That gets you in the door, no problem. But the real magic, the best rates, the VIP treatment, that's all reserved for the super prime club. And that party doesn't even start until you hit a 720. You might be close, but in the world of lending, close just doesn't cut it. And trust me, this isn't just some theory. The unique financial climate of 2025 is making this difference between prime and super prime more critical and way more expensive than ever before. This slide really nails the tough spot lenders are in right now. On one side, the Fed is cutting rates, which means the money they're lending out is getting cheaper for them. Awesome, right? But on the other side, they're seeing a really scary spike in people falling behind on their payments. So the risk of you not paying them back is actually going up. So, what's their move? How do they handle this? Well, they're responding with what's called a flight to quality. They're basically taking all those new savings from the lower rates and offering them only to the absolute safest of bets, the borrowers who have almost zero chance of defaulting. Everybody else, you're going to pay a premium for that risk they're so worried about. All right, this brings us to the most important part of this whole thing. The actual numbers. What specific score do you need to break through that wall and unlock those VIP rates that lenders are guarding so carefully? Boom, here they are. These are the magic numbers for 2025. For a mortgage, you're not just aiming for 720 anymore. You need a 740 or higher to get the absolute best price. For a new car, get this. Lenders want to see a staggering 781 or more. And for a personal loan with nothing to back it up, you pretty much need to be perfect, an 800 or higher. Suddenly, that 690 feels a whole lot further away, doesn't it? Now, you might be sitting there thinking, okay, but what's a few percentage points really? Well, how does $59,000 sound? Because that's roughly the extra money and interest you'd pay over the life of a typical $400,000 mortgage just for having a good prime score instead of a top-tier super prime score. And this chart shows you exactly how it happens. That 690 score puts you in a group paying around a 7.55% APR. But get that score up over 760, and suddenly that rate drops to about 7.24%. It looks like a tiny difference on paper, I get it. But you compound that over 30 years, and yep, there's your 59 grand. This is real money we're talking about. Okay, I know that might sound a little discouraging. But hang on, don't despair, because there's a fascinating new development in 2025 that could be a total game-changing shortcut for a lot of people trying to make that leap into the super prime tier, especially for mortgages. For the longest time, whenever you got a mortgage that was going to be sold to Fannie Mae or Freddie Mac, lenders had to use this one specific, kind of old FICO score model. But now, big change. Starting in July 2025, the rules are different. The government now lets lenders choose between that old FICO and the newer VantageScore 4.0. And for you, that choice is a huge, huge opportunity. So why is this such a big deal? Well, for starters, VantageScore 4.0 is just more modern. Critically, it looks at data the old models completely ignored, like your history of paying rent on time. If you've been a great renter for years, this could literally be the exact boost you need to jump from a 690 into that 720 plus super prime territory. The bottom line, you can't just apply anywhere anymore. You got to strategically shop for a lender who's using the score that makes you look best. So, let's bring it all home. We've talked about the high stakes, the magic numbers, and this new VantageScore shortcut. So what can you actually do about it? Let's put it all together into a clear, actionable playbook to help you slash your rates and join that super prime club. Okay, it really comes down to 3 key moves.
First, the goal is crystal clear. You got to get that score above the 740 mortgage threshold. But the score isn't the whole story. You also have to nail your financial fundamentals. So, step 2, lower your debt-to-income ratio, basically how much you owe versus how much you make, down to a healthy 35% or less. And finally, step 3, reduce the lender's risk by bringing a bigger down payment, which lowers your loan-to-value ratio. And this is why those other numbers are your secret weapon. Think of a low DTI and a low LTV as your compensating factors. Even if your score is still a little shy of that 740 magic number, showing a lender that you're not drowning in other debt and you've got serious skin in the game, well, that can be enough to convince them to give you that super prime rate anyway. You're proving you are not a risk. So there you have it. You understand the game, you know the magic numbers, and now you have a clear 3-step strategy to get the absolute best deal. The only question left is, now that you have the playbook, what's your first move going to be?